Hello, this is the Wizard from Winning on Wall Street. Today is Monday, September 19th, 2011. It's the market wrap. So, basically the S&P 500 closed down 1162. We were down 27 points at the low of the day, and we rallied back because we're having a Fed meeting tomorrow, and the markets are hoping that the Fed will come out with some magical program. But if you look at the chart, this looks like a bear flag. Wave one goes down, wave two either goes sideways or back up. And then when we break this 1125, if we break 1125 on the S&P 500, wave one went from 1350 to 1125. That's 225 points. We go from 1125 to 900 if we break 1125. So that's the first thing. Second is it looks like we're tracing out a head and shoulders if we fail here. However, the left shoulder, the head, the right shoulder normally is the same level or lower than the left shoulder. In this case, the right shoulder is higher, so we'll have to see if this is a head and shoulders. If in fact the S&P rallies and gets above the 50-day moving average, this blue line is a 50-day at 1225, it would actually be a W breakout, which would be bullish. Now the moving averages are all in a bearish formation. The 8, the 10, the 21 are all below the 50 in downtrends. However, we're starting to see a little turn up in the 8, the 10, and the 21. So we're at a very critical point. Are we in this major bear market where we're going to go back and test support, or will we break out and surprise people to the upside? Our ADX, which is our most valuable indicator, ADX and MACD, ADX has been on a sell signal since late July, 1325, came right down to the green, the red did, and it bounced. So far, we're still on an ADX sell. MACD, on the other hand, has gone to a buy signal right here, but starting to roll. So kind of mixed signals from that. The trend is lower. Now, one of the things that's happening recently, big rally in the dollar. And again, the dollar actually pulled back today after being at higher levels, but still closed up 0.6%. So you can see this is a bottoming formation. So I know a lot of people are negative on the dollar long term because of the stimulus and the printing and the devaluing of the currency, and I agree with that. But in the short term, the dollar looks like it wants to rally. And so we'll see what happens. If you get above 22 on this UUP, the dollar ETF, your next target's up here. So again, if the dollar rallies, bad for commodities, bad for stocks, and that's pretty much what's been happening. But even though we're in a bear market, there's still opportunities. It's a market of stocks, not a stock market. Look at Mako today, MAKO, a stock we've been following for months now. And look at this, new high, up $4.21, 40.48, up 11%. And this has been a stock that's been on our watch list. Big winner here. It depends on what we're playing, but certainly there's opportunities in this market. Here's another one, a biotech that we've been following for the last 6 months or so. JAZZ 43.76, very close to an all-time record high. And so there are stocks that are continuing to do well. So basically, let me just do gold real quick, GLD, because a lot of people have been surprised by the downward movement in gold. GLD down today. Uh, our belief is we're still in a major bull market. This could be a top, but I doubt it. And the bull market has more to go. All the moving averages are aligned properly, although the 8, the 10, and the 21 are starting to roll. So you're going to have to see a rally in the dollar soon. I mean, a rally in gold soon to continue this uptrend. But I believe gold's going higher, 2,000 an ounce, whatever the number is, and that the gold mining stocks are going to play catch up. and you're going to see a huge move, a crazy move in the gold mining stocks. Here is one of my favorites, RIC, at 12.30, up 8 cents today in a terrible market, new all-time record high. The other one is AUY, closed down 16 cents, 15.98, but it's hanging right here. So those are the two I like the most. Again, look for a big rally in gold mining stocks to play catch up with gold. So, in summary, today, oil down big. A lot of people, by the way, were playing the Doug, the short oil and gas stock ETF, but it too pulled back as the market rallied. It's still in this kind of, we call this a bull flag. Wave one goes here, wave two goes down, wave three does the same as wave one. So Doug is an interesting play if you're interested in shorting oil and gas stocks. And then the 2 to 1 of Doug, or the 2 to 1 leveraged, is the SCO, Pro Shares Ultra Short Crude Oil. And here's something interesting about this chart. We've drawn a downtrend channel line from the high, the lower high, and so forth. Notice how every time we rally into that channel line, we fail. Rally into the channel line, we fail. This time we rallied in the channel line and we broke through it. So keep an eye on the SCO. If oil continues to fall, this one has huge upside. All right. So good luck trading. Here's the S&P 500. Again, we think we're tracing out a head and shoulders. Unless we break above 1225, then it's a W breakout. Good luck trading. Don't forget Winning on Wall Street. You can go to our website, winningonwallstreet.com, or you can call us at 800-565-1855. Good luck trading, and may the stock market gods be with you.